Welcome to Conquer Your Finances, Conquer Your Life. I'm your host, Dawn Santoriello, where I come to you each and every week to empower you to live a happier, healthier, and wealthier lifestyle. So today we have a great topic and a great guest speaker. We're talking about health insurance, and I know all you out there are getting all hyped up and there's lots of concern. Rates are going through the roof. So I'm here with my special guest, Greg Loerzel of Visionary Insurance Partners. So Greg, thank you so much for being on my show. It's a pleasure to have you. And
thank you for having me.
Yep, and it's so timely now. We're all getting those renewals.
Yes, indeed.
So I understand you're in the business for 32 years. You own your own company. And now, have you ever seen anything like today, like with the insurance, what's going on today? Or is this like something brand new that's happening?
This is something that, all my years in here, you always see different cycles coming through. But this one is a cycle that's just been building up to this year's like a crescendo of ridiculously high rates, and people just weren't getting a subsidy. Even people that are well off don't want to pay twice what they're paying for their mortgage for their health insurance, and that's what they're seeing. In the Philadelphia area alone, you're seeing 36% rate increases on the most popular plans, which are the silver plans. And there's a lot of reasons for it, but people don't want to hear the reasons. They just want alternatives.
And that's what I had too. Yeah, the silver plan. That's how I met you.
Correct.
Because I wanted to see what else could I do. Now, could you explain why is all this happening now? Like, why now?
Well, it was from the day one, which this is our 5th open enrollment for ACA, or better known as Obamacare. From day one, it was something that was unlike anything we've ever seen. A plan that's guaranteed issue, that you can jump in almost any time. You could actually, especially in the first years, they made it so easy to jump in and out of this, even outside of open enrollment, that you could wait until you had cancer and then jump on a plan.
That's crazy.
So if you can get on a plan that easy, the risk levels go through the roof, and insurance companies just can't handle that kind of risk without keep moving the rates up.
So that's why we're seeing all this too.
Exactly.
And another thing that annoyed me too is I noticed some people, like business owners, because they're like we kind of could just fudge. Well, I don't know, if fudge is the right word, but like control our income, and a lot of people are just forcing their income down just to get the subsidies. And I'm like, I know they make a lot more money than that. And I'm like, that's kind of like eating away at the system too, because there's actually poor people who do need that. Like
Correct.
The people, they shouldn't abuse it.
And the other happening, which isn't good, are independent agents like myself. Just to get the business, they realize it's easier to get business that's highly subsidized, where people don't have to take as much money out of their own pockets to pay their premiums. So they're coaching their clients to fudge their income levels.
Oh wow, that's so unethical.
It's very unethical.
Oh my gosh.
So there's so many things at play here that are really killing the ACA. And this year, I guess, people feel very empowered, especially the people that aren't getting subsidies, to get off of the plan, because with Trump in office, a new administration, they feel like, okay, this is our chance to get out of this, because it looks like it's about to die anyway.
Yeah. Now, what are some alternatives to Obamacare?
The alternatives that exist have always been there. They're plans that have been around since the 60s. The very first health insurance plans ever sold in America were indemnity. An indemnity plan, the most famous illustration of an indemnity plan, or example I should say, is Aflac. Duck is very famous. It's one of the strongest ad campaigns we've ever seen in this country.
Yeah, everybody knows that duck.
Everybody knows the duck, and Aflac is one of the strongest companies. So now you have lots of companies that have joined the marketplace for indemnity plans, and they're extremely popular. It's the fastest growing segment. The other segment has also been around for a long time, that's short-term major med. The difference is short-term major med has to keep being reapplied for. And when I say reapply, you literally have to requalify again. An indemnity plan, once you're in for good, as long as you keep paying your premiums.
Now, could you touch on, for some people that don't know what indemnity means, how would you describe an indemnity plan?
An indemnity plan is something that's very straightforward. Something occurs, a medical condition occurs, and you get a payout depending on what that condition is, and you get a flat sum of money. Now, if that flat sum of money is in excess of what you actually have to pay for your medical bills, you get to keep it. So you put money in your pocket. And that's the premise of all those commercials with Aflac and the doc of, hey, he comes walking around with a big stack of money and tells you it pays your medical bills and you can put money in your pocket to pay your other bills or even go on vacation.
And that's great.
Yeah.
And now how about the short-term medical? How does that differ from Obamacare?
Short-term major medical is the exact type of insurance we were all used to before Obamacare. So it's the type of plan where you had to answer medical questions. People who are healthy, they like to answer medical questions because they know that's going to give them a better rate. And that hasn't changed. And that is the biggest difference. Right now, when myself or any of my agents will quote a rate to somebody, it's disbelief. They're saying, this plan looks as strong or very close to what the strength is of my current plan with the ACA. How can this be 1/3 the cost of ACA? And we are really seeing it, 1/3, sometimes even 1/4 of the cost.
Wow.
And the main reason is
We'll
medical
hold that
questions.
right there. Okay,
Okay.
we'll hold that
Okay.
thought because
Okay.
we got to go to break right now.
All
So
right.
stay tuned, and we'll find out how come it's a lot more inexpensive than Obamacare. So don't go anywhere, folks. Welcome back to Conquer Your Finances, Conquer Your Life. I'm your host, Dawn Santoriello, and I'm here with Greg Loerzel. Wait, did I pronounce that right? Loerzel, sorry.
That's good. That works for me.
Getting all fired up about this health insurance talk.
I'll answer anything.
So before we left for the break, we were talking about why these plans are more affordable. So can you go more into that, like how these alternatives are more affordable?
The main reason is they can screen you.
Okay.
These companies can now screen you with these plans, so they ask medical questions. Now, they're not very, they don't dig deep with these medical questions. They're very simple medical questions, and there's never any kind of blood draw. People who are used to getting a big life insurance policy, they know that someone's going to come out to the house, do a blood draw, whatever. Nothing like that. Some simple medical questions, because nowadays with the Freedom of Information Act and the Medical Information Bureau that's set up, they can quickly do an electronic search. So the other thing that's nice is you get your medically underwritten answer, whether you're approved or not, typically within 48 hours.
Yeah, that's pretty good. That's
Yeah.
nice and quick, so you're not stuck waiting.
So you're not worried. You're not thinking, what's going on? Am I going to get approved? Am I have to look for other coverage? We're going to know in like 48, maybe 72 hours.
Okay, that's a quick turnaround time.
Correct.
Now, what about people who are concerned about the ACA mandate, known as the Affordable Care Act mandate, and the penalty?
I look at it this way. I always am going to educate people because most people aren't paying the penalty. They weren't paying the penalty when the Obama administration was in office because one of those things that didn't have much of a bite to it. And now, even less people are worried about it. I'd say about maybe 1/3 of the people are worried about the penalty. But if you're worried about the penalty, you can get, as a caveat to all this, we can put what they call the minimum essential coverages onto the plan.
Okay.
And that's just an additional $70 per month for an individual, $170 a month for a family. And now it makes it 100% ACA compliant. You even get the 1095 that you submit to the government at the end of the year. And it also really boosts the benefits because it gives you all those preventative benefits that the ACA mandates say you need to have.
Oh, that's great. And then too, like, could I say this on air? Like, you save me money. Like, mine was going to go up to $636 a month, and with that minimal essential coverage, it's only $301 a month.
Right.
So there's like $335 saving just there alone. So I could use that money for anything else, and that helps because again, it goes in line with me helping my clients find money that they're losing unknowingly and unnecessarily. So
Absolutely.
they're losing a lot of money to Obamacare, and they don't have to.
Exactly.
So.
Exactly.
Now, is it all the states, or is it just Pennsylvania that's suffering this fate? Is it?
No, I would say Pennsylvania is one of the states that are getting hit bigger, and across the entire state, it's about 36%, which is ridiculous.
Yeah, that is.
Because they were already extremely high rates. The whole country's getting hit this way, though.
Mm-hmm. Okay, so that's good to know, so we can help save the world, help save the country.
Oh, yeah, that's exactly right.
Now, here's another thing I encounter too. People are like, oh, well, I have a group plan. Are those group rates, are they less expensive than individual, or what's?
And I'm glad you brought that up because a lot of times people, they feel like this desperation and they think they're getting singled out as an individual and they want to join a group to get better rates. Now, back probably 10, 15 years ago, there was a certain amount of truth in there. You could get better rates on a group deal. Nowadays, it is not the case. Anytime you get to go into a plan, and the company has to accept you blindly, can't ask any medical questions, and those are group plans. The group plans have to be compliant with ACA also, so they can no longer underwrite. So when you can't underwrite and you're healthy, you're putting yourself at a disadvantage. And so now you're lumped in with all the high risk too. So if you want to get rates that are based on your health, you want to go to individual plans, or on a group basis, you can go with limited self-funded plans, because they can ask medical questions and you get rewarded greatly for answering medical questions. Your rates will drop at least in half to do that.
Oh, that's great. Now, what exactly is a limited self-funded plan?
Limited self-funded, when people hear limited and self-funded, those two words, and put those two words together, it's intimidating. They're like, oh my God, I don't want to do that. That sounds like it's a lot of risk. It isn't. The risk is clearly defined, and typically, especially nowadays, because the regular group plans, due to the ACA compliance, have jumped so high in cost, that these limited self-funded plans, the worst exposure, there's a corridor of exposure on a limited self-funded. There's your least scenario, payout scenario, and that would be your fixed cost. Then there's these variable costs, but they're capped. So there's your worst case scenario. So the first time in history, again, because group plans with ACA have blown up so much, these limited self-funded plans, the worst case scenario is still about 33% less than the ACA plan, group plan. So everybody who's learning about these, they're flocking to these plans.
Yeah, I don't know why everyone wouldn't. This is like, I was so happy I found him. Like, wow, this is amazing, all this money saved.
Yeah.
And then I also hear there's something going on with Trump and his association plans that he wants to put in place. So what if that all takes place? How would that affect everything?
That would be, it wouldn't be the ultimate thing, but it would also be something else that we could look at. What these association plans, they're small group plans. They can go down to even one life if you're self-employed.
Okay.
And the association plans, you say, you would think what I just said about group plans would kind of contradict what I'm saying. But the difference with association plans, they can ask medical questions. And they're very limited medical questions. So people that are watching right now and listening to this broadcast, they might say, oh my God, well, do I have to be like an Olympic athlete? Do I have to have perfect health? No, you just have to be relatively healthy. You can have diabetes. You can have a lot of things. As long as it's not severe, then you're probably going to be accepted on these plans. And the association plans, that's part of the state line, being able to do business across state lines. So if an association plan is in Delaware beats an association plan in Pennsylvania, and you live in Pennsylvania, you'll be able to go, when I say going across state lines, we're not talking about physically going across state lines. You'll be able to call that company or the agent that represents that company in another state because it's a better deal and get on that deal.
Oh, that's great for people.
A lot more competition.
Yeah, hopefully that'll happen. That'll be a good thing. Well, don't go anywhere, because when we come back, we have more with Greg. Welcome back to Conquer Your Finances, Conquer Your Life. I'm your host, Dawn Santoriello, and we're talking with Greg. So now we learned about the association plans. So now, what does the future of Obamacare look like? What does that entail?
Therein lies a lot of controversy, and I try to stay out of politics when it comes to this, but truth of the matter is, it was blowing up. We all know that. This is the 5th open enrollment, and it has steadily and quite rapidly increased every year in price. And this year is the biggest rate increase ever. So you hear all this talk about replace and repeal. Well, the vote never went through. Always missed by one vote. That being said, who's going to pay for this? No one's. So companies are leaving the industry. So there's a lot of places where they only have one carrier to pick from. So that's not much choice. Yeah. There are some places where there's no one to pick from. So they have to go out and get an alternative plan. So who can predict the future of it? But there's got to be some big changes in order for this to survive in any form.
Yeah, maybe it could just fall apart, because if everyone leaves, because it was ridiculous. Like I had $70 co-pays, high deductibles, and paying $400 and something a month this year, and then going to have to go to $636 next year. So it's like, who wants to pay all that? That's
nobody.
Yeah.
And if you're healthy, you won't. And that's what's going on. Obamacare's the ACA is turning into a gigantic national high-risk pool. So if you're healthy, why would you want to be in there and subsidize all that high risk if you're healthy? So there's a mass exodus going on right now. People are leaving Obamacare unless they're getting a subsidy. So I have plenty of clients that say, hey, listen, I'm at an income level where I'm going to get quite the subsidy. So we help those people too. I'm ACA certified. I will go in and help people. I'll help them help themselves. But there's something for everybody out there this year. Next year, whatever, who knows? But right now, everybody can be in the driver's seat.
And that's good. You want to be in control of your destiny and everything like that.
Correct.
Now, can you share a story about someone that you helped, or maybe a business owner or someone like that?
Yeah, I because I'm the president of Visionary Insurance Partners. I'm usually just helping my agents, sell. I'm educating them. I'm doing training seminars. So I don't normally get involved, but this fall I just naturally got involved because friends and family are calling me. Old clients that only knew my name from 5 years ago are calling me, and they're all sharing these, the horror stories of, oh my God, I thought this could get no higher, and I just got a 36% rate increase. So all across Pennsylvania, that's the figure, 36% on top of a ridiculous number. I'll share one for you. A family with the dad is 44 years old. All right, that's not that very. That's not old.
Yeah.
His rate was $2,400 a month last year, which is ridiculous.
Yeah, that's really
It
high.
just jumped to $3,600 a month.
Wow.
$40,000.
That's
so
crazy.
we are able to stack 5 different indemnity plans together, and what's nice about indemnity, they all pay on top of each other. Major Med doesn't do that. You can never get more than 100%. Indemnity, you can stack. If you walk away from a procedure with $80,000 in your pocket excess, that's fine.
Yeah.
We stacked 5 programs, and his policy, instead of $3,600 a month, is $940 a month.
Wow, that's
So
amazing.
He couldn't believe it.
Yeah, this is great. I think everybody needs to do this. Like, I was
Well, they
so
should
excited.
look into it.
Yeah,
They should look into it.
Yeah, when I met, I'm like, sign me up. Let me do this and let me help people, because like I know you're extremely knowledgeable. Just like a couple minutes talking to you on the phone, I was like, this guy knows his stuff.
Thank you.
Um, so I'm glad that we were able to form an alliance and help everyone. So now how can people find you? Because everyone's going to need to know this. Do you have a website?
We have a website. They can call me. If you're an agent, I can help them get appointed with these companies that are doing so well right now, the ones that are most competitive for the client. So get a hold of me, and I'll get you in touch with a local agent or whatever.
And now, what number could they find you at? What's your number? Or
The main number, which they can always find me through the main number, is 484-696-1221.
Okay, great. And be sure to mention that you saw him here on Conquer Your Finances, Conquer Your Life. Well, thank you, Greg. It was a pleasure having you here. I really appreciate you being here to help my audience and everyone else.
Thank you, Dawn. Appreciate it. Thanks.
And stay tuned next week, because we're going to still empower you to live a happier, healthier, and wealthier lifestyle. Have a great day.